transparency with stocks and options about where the institutional market and the big players are positioned. So after trading as a broker on Wall Street, and yes, it's true, I wasn't just a broker, and I wasn't just the top broker and sales agent for the last 6 months that I was there. Out of 500 people, I was number one for over 6 months. And so after, doing that for a while, I also trained some of the up and coming brokers there. That means people who were joining, and I was training them on new methodologies and hosting classes, and also teaching to our kind of higher end clients. I had classes on the weekends that were filled, with the room, like literally every seat filled, to teach people about our methodology. And then after that, I got a job trading for a hedge fund, which was a lot of fun because, I had been on the institutional side. When you're a broker, you're on the sell side. When you're on the hedge fund, you're on the buy side, which is a little bit different. And same thing happened there. I didn't want to teach, but they said, hey, we want you to train our new hirees, the new traders that are coming in. And then pretty soon I started doing that. So obviously I'm pretty decent at trading, and I'm happy to share with you, like full kimono open, what our trading record is in our Trading Waves service. So we have the Trading Waves service. I'm the head of the Trading Waves, which is my signal service that's based on my methodology and my system. And so my system is very easy to understand. If you can learn these 3 letters, you can learn my system, which is PFP, which stands for, and I'm going to share my screen here so you can see that. Let me take over. All right, cool. So I got that. So PFP, and this stands for positioning. That's where both retail and institutional players in the market are positioned. F stands for flow. That's the buying and selling transactions of options and shares on the day. I want to know how that's playing out, because that's going to tell me where the currents are for the day, where the wind's blowing, and what kind of momentum or aggression is in the market. And then the last part is price action. And so that is, you can think of price action as a channel to visualize how positioning and flow is changing over time. It's not going to tell you where positioning is today, but it can tell you how it's changed over time in the past. And so if you can learn these 3 things, how to read the positioning, how to read the flow, and how to read the price action in our methodology, then you can make winning trades in the market. And so, you're going to probably say, hey, what qualifies you besides your 25 years experience, besides your 60,000 hours behind the charts, besides your 10,000 plus trades, besides your viewing and studying over 8 billion candles in the market, besides all that, besides what that has done to my brain and the massive amount of real estate in my brain that has like rewired itself just to be able to do that. Besides all that, what's your record? What's your performance? Well, no problem. Easy. So this is the Trading Wave service. This is every trade we've ever taken. Everything is here, wins and losses. We don't just talk about wins and then hide our losses. We don't just like, oh, here's our win, here's a win, here's a win, here's a win, and then just never talk about the losses. No, I have no problem showing losses. Losses are a natural part of the game. Every trader, even the best in the world, has losses. And so, if you're confident and you make money trading, you don't have any problem hiding those, or not showing the losses or anything like that. So what do you see? More green? Yeah, you see more green than red. Green is winning trade, red's a losing trade. What do you see also when we sometimes split our positions? You see that the multiple times that we split our positions, the majority of times, we're making money on both legs. Every now and then we have a trade where we lose a little bit on the second leg. But the majority of times when we take trades and we split them, we are winning both legs of the trade. So we take profit a little bit, so we bank some profits, put it in the bank, that de-risk the trade. And then we can hold that. And if we get a good runner, we can profit from that. And if the market starts to pull back, no big deal. We just close it and we're done. So you see more wins than losses. You see that the winning streaks are way bigger than the losing streaks. Biggest losing streak is 3. Biggest winning streak is 7, which is over double. You did have a little patch here. It was kind of summer. It was a weird kind of time of trading. But after that, what do you see? Back to winning again. Winning again. Even the last several trades, we have 3 or 4 open right now. But 1, 2, 3, 4, 5, 6, 7. Of the last 7 trades, we won 5. And you can see that we have 4 open right now and 91 trades total. 157, lost 30. That's a 65.5% win ratio. And on our average win, if we risk $10,000, we're going to walk away with $5,600. And average loss is going to be about $6,250. But we win that much more than we lose. So it makes up for the losses. This is mathematically, we make money trading. There's nothing anybody can say about the stats of this system. It makes money trading. And then here's just a breakdown of the strategies and the tickers that we use. So with that being said, I want to go over a couple examples of my system and my trades. And we're going to share with you one that we just did recently on March 7th, just a few days ago.
By the way, Chris, real quick, if you're watching this and you're very new to options and you don't understand, don't worry. Chris Capri is head of the options school, where again, it's so there's a place for you to learn that, or don't feel like overwhelmed right now. It's fine.
Yeah, so options is one of those like stock trading is relatively simple in the sense that if you want to make money, you got to, and you expect it to go up, you're going to buy it. And if you expect it to go down, then you're going to sell the shares. And it's pretty straightforward. If you buy it and it goes up, you make money. And if you sell and it goes down, you make money. And that's it. It's very vanilla. There's only really a couple ways you're going to make money trade. Yeah, you can make some dividends and things like that, but that's generally going to account for maybe 1 to 2, maybe 3% of your portfolio. The real money is in the directional trading. But stock trading by itself is simple. Options, stocks, you really only have like 2 ways they're going to really generate income, right? And that's through the getting it directionally right. With options, you can make money if it's bullish. You can make money if it's bearish. That covers all the ways you may do in stock trading. But then you can make money if it goes sideways. You can make money through the passage of time. You can make money through volatility going up. You can make money through volatility going down. You can make money in you can make money in both directions. You can say, you know what? I don't know whether this is going up or down, but whatever way I think it's going to go, I think it's going to explode in one direction or another. You can make money betting on both directions at the same time. You can't do that with shares. You can't do that with shares. So the bottom line is options, there are a lot more ways to make money trading. With those extra ways to make money trading, there is a little more, a few more things you have to learn with options. And because of that, I think people get intimidated, and, the language and this, what is this delta and gamma and vega and all this, and what is expiry and what are strikes and all this and that. That's all something that anybody reasonable intelligence can learn. Like if you got 100 IQ, you should have no problem learning options. So it seems intimidating at the outset, but once you get all the language down, you're going to learn it pretty well. So with that extra ways to make money, you just have to do a little bit extra study. Once you've done that, it's not hard. But even if you don't know anything about it, don't worry. We have an entire school, as Rodrigo said. So I'm head of the Trading Waves, which is a signal service where I give trade signals only based on my PFP system. Then I'm also head of the Benzing Option School. And that is designed to be your 101, your 201, your 301, your 401, and even your 501. Like we give kind of some graduate level type training in options when we start talking about option dealer and market maker hedging and how that impacts the markets. You don't have to know about it right now, and that's no big deal. You can learn that through that. We have made it really easy for you to learn options. So if we talk about options the way it doesn't make sense, don't worry about it. You can learn all that as well. All right, so I want to go over the SPY trade. And you can see the SPY trade right here. 3.7. And so what do you see? You see that I'm buying a bear put spread. I'm taking a bearish bet on SPY. And so I'm buying the put at 555 and I'm selling the put at 550. Okay. This is Mountain Standard Time. I live in Colorado, Boulder, Colorado. It's 8:21 a.m. It's about 50 minutes after the market opens. And it's for the March expiry, and it's 108 debit. It costs you $108 per contract. Pretty cheap. Most of our contracts are $100. Most of our trades are $100 or less. Most of them. All right, so let's go to the exact trade here. So keep in mind, March 7th, 8:21 a.m. All right. So here's the price action in SPY leading up to our trade. As you can see, it has been drifting, and drifting is probably a good word. The other word is corrective. And you can see that it's kind of trekked downward a little bit, but no major aggressive selling, right? It's just kind of sauntering its way down. It opens here about 575, and, here it is. Only about 3 points later after 1, 2, 3, 4 sessions, right? So we generate the trade alert because on that day, we see in the positioning, in the flow, and in the price section, we think this is going to start to make a run towards 555, maybe even 550 in the near future, right? So this is the moment we generate the trade. Boom, that vertical line is the exact same time we generate the trade. You can see it matches up 820. Sells off, bounce back a little bit. Am I worried? Am I freaking out? Am I like, oh God, am I sweating? No, not at all. I trust my system. And so we close probably pretty much break even on the day. Look what happens the next day. Boom, sells off, Now it's closing at 561. Keep in mind, we took the trade. This is at 573. Closes $12 later, one session the next day, and then boom, even lower. We take some profit, which you can see right here. 4 days later, on 311, trimmed 1/2 position, SPY bear put spread for 178. We made 64% in this leg, and we took that on a Friday, and so that was Tuesday, right? Should have been Tuesday. So on Tuesday, it's only 2 sessions later, we are banking a 64% profit. Okay? And we even put a note in here for our traders. We're holding the rest as we think overall bearish pressure remains, despite the chance for a short-term rally. Okay? So we not only take some profit, put that in the bank, which is pretty much paid for the trade or almost paid for the trade itself. We also give people a note and say, hey, this is what we think is going to happen. And keep in mind, this is what we're saying here. We think overall bearish pressure remains despite the chance for a short-term rally, right? So this is the trade right here. Boom, we take profit. Now keep in mind, when we first took this trade over here, this is the right edge of my chart. My right edge is no different than your right edge. I can't see any further into the future than you can. But what did we say it was going to get to? 555, maybe even 550? And how low did it go? 551. So when it was at 573, we were predicting ahead of time saying, hey, we think this is going to get to 555, maybe even 550. And within 4 days, it already drops approximately $14. So called the direction right, called the strikes, everything like that, banks of profit. And we even predicted a short-term bounce. We told everybody, hey, might have a little bit of short-term bounce. And that's what it's at. So that's the SPY trade right there.
Really quick, Chris, Jan Hoffman says, Jan Hoffman is a member, says, I closed that trade today for about 70% profit. So big congratulations. And look, Chris, this is the thing. Most people, when they start out, they think the only way to get into trading is to, blow up 5-10 accounts and wing it instead of building up their account with trades like these while they learn and build the skill sets. It seems like an unknown thing, but that is the right way you would call it, right?
Yeah. So what Rodrigo didn't mention is not only have I been doing trading for 25 years, but I've also been training in a pretty advanced way in neuroscience. So I'm actually doing kind of graduate level study in neuroscience right now. And because I want to understand how the brain works, as a trader, I'm not an athlete. It's not like, I need to practice my free throws or my spirals or anything like that. As a trader, I'm performance-based. Everything I do is performance-based. And what that means is that instead of focusing on my muscles per se, because I'm not using my arms or my biceps or my legs to generate good trades, I'm using my brain. And so I want to know how my brain works. And so that's why I've done this advanced study in neuroscience. And so in my training in neuroscience, the most important thing you have to understand is, how does the brain acquire skills? How does it go from learning to memory? Like to be able to trade well, you have to take something from learning to memory to a skill, right? So how does the brain do that? When you learn how the brain does that, then it makes it easier for you to create those skills. Now, in terms of what you said, a lot of these people are winging it and blowing up 5 accounts. The only thing you're teaching yourself to doing by blowing up 5 accounts is blowing up accounts. The brain is actually, even though it's incredibly complex, it's also somewhat straightforward in the sense of whatever you repeat the most is what your brain is going to dominantly wire itself for. And so if you blow up 2, 3, 4, 5 accounts, then you are just consistently wiring into your brain how to blow up accounts. That's not how you become a good trader. You become a good trader by executing the habits of what good trading is about. And you have to repeat that. You have to learn it. You have to be able to do it in the challenging moments, not just in the easy times, but in the challenging moments. And the more you repeat something, the more your brain's going to start to pay attention to that signal. Like, oh, that's a good signal. I want to follow that. This is what it takes to be a good trader. This habit right here, this, learning this particular method will help me become a trader. And it starts off with one cell, and then it's multiple cells. And then pretty soon you have a whole neural network that is wired towards the habit of that particular trading habit or skill that you need. And then you just got to do that for all the habits you need, all the skills you need to become a good trader. So blowing up accounts, winging it, you're just teaching your brain to wing it. You're just teaching your brain to blow up accounts. If you want to be a good trader, then you have to repeat the things that good traders do. And one of the best ways to do that is to watch somebody else doing it. So I don't know if you know this, but we have these things in our brains called mirror neurons. And the term is actually quite simple. If we watch somebody do something, like if I'm a baseball player and the person that's up to bat before me, if they strike out, my chances of striking out actually increase. But if the person in front of me gets a hit, my chances of generating a hit actually increase because I've seen that person generating a hit. The same thing goes for trading. And if you think about it, this is a brilliant thing about the brain. If we want to learn a habit, if I'm a little tiger and I want to watch Papa Tiger learn how to hunt, by watching him, my brain is going to take in that habit. Those mirror neurons are going to start to be like, hey, do that. And whatever it watches the most will eventually become a habit of your own. When you watch a good trader consistently do the same thing over and over again, you see their habits, they're consistent, the way they trade, the methodology, how they handle things, how they pick out patterns and things like that. When you see them doing it over and over and over, your brain starts to take that on and say, hey, pay attention, this is important. And so that is one of the best ways to learn. It's not just doing it yourself, but it's watching somebody else do that live. And so that is a super important thing about how to become a good trader. So with that being said, this is the SPY trade. We're still in this trade right now, and I'm still holding because we got time, and I think there's more money to be made. We've gone over this trade, but let me show you something else here. So this is, we're not just 65, 66% accurate in our trades. We are also very similar in terms of our predictions for the market. So every day, my students, Trading Waves, Benzing Options, they get access to something called this morning market commentary. And this is, so I'm in Boulder, Colorado. The market opens for me at 7:30. It's before the market opens. So before the market opens, I'm looking at the PFP. I'm looking at the positioning. I'm looking at the flow. I'm looking at the price action. And through these things, I can get a pretty good sense of what the market is going to, what it's likely to do for that particular day. And if you join, you'll see over and over, and Jan Hoffman will tell you, hey, his market commentary is pretty accurate. He's a member. Any of my members will say his market commentary is pretty accurate. So I'm predicting before the market opens, I'm telling you what's the most likely scenario for the day. And so what do we say on March 7th? I want you to pay attention to this key phrase right here. So look at this right here. Second paragraph. Expect upside moves to be corrective or not legit until the tariff bugaboo clears. In other words, until we have some clarity on tariffs, expect these upside rebounds to not be believable. Treat upside rallies with skepticism, yet downside moves as legit. Now, what happens on the 7th? First, we get an initial sell-off. Here's the chart. Let's delete these. We can hide these lines for a second, maybe. Actually, we don't need to. Here's the 7th. Okay? We get a downside move, and then we get an upside rally. And a lot of my students were messaging me like, hey, what do you think about this? And I'm like, I don't trust it. I think we're going to go lower. I even myself, on this upside rally, took a bear put spread in C, took a bear put spread in Tesla. Told my students about it. And look what happens. Goes sideways, and then boom, the market opens on Monday, sells off aggressively, much lower. So it's not just the trades that I'm taking. I'm also giving you market commentary every single day, Monday through Friday, before the market opens, and saying, hey, this is what you need to watch out for. If this happens, look for this. Don't trust these upside rallies. And if you were someone who just follows charts, you cannot follow charts and expect that to be your only signal. Charts is giving you some incomplete information. If you'd follow charts, you might think, hey, it's going to bottom. The bottom's in. I'm going to start buying. And then boom, you get crushed. Whereas we're taking these rallies, treating with skepticism, and establishing bearish positions and making money. So it's not just our trades that are 65% accurate. Our market commentary tends to be about 65% accurate. Now, let me show you another trade here. So the Benzing Option School, you can see we didn't just take one trade. We took two. So the Trading Waves, normally the Trading Waves get more trades. In this case, the Benzing Option School gave him a little extra love. I gave him two trades on SPY. We didn't just do this position, which was the one we gave to Trading Waves. We also did another position, 565, 560. Same expiry, same time. Now, let's go to the charts again. And what happens with that trade? Same thing. Nothing happened, nothing different. We took it this time, took profit at the same time. And on that one, You can see 4 days later, we made money on both these trades. 64% on this one, 47% on this one. Boom, 2 trades, both winners, trading with the market. So that is a couple trades of giving examples of how we use PFP. And I want to give you one more example of a market commentary where, again, this is not, after the fact stuff. This is all before the fact. All right, March 11th market commentary. This is yesterday. So what are we saying yesterday? Let me go to the key sentence here. So with all this selling pressure, why am I thinking we could get a decent bounce to the upside? Markets have been selling off like for weeks. For weeks. Tesla is down like what, 40% from its all-time highs or its recent highs after the Trump bounce. And I'm telling everybody, hey, some of the conditions in PFP, positioning, flow, and price action, are setting up for a bounce. And we told everybody. Now, you don't have to understand all this, what high negative gamma means. You don't have to know what about high IV and how this creates a Vanna lever in the markets. Options market is just a bunch of different levers. And some of the levers push the market down and some of them push the levers up. And when you can learn how to read these different levers in the market, you can start to be like, hey, I got a lever here and I got a lever here, all pushing to the upside. We might have a chance for a rally. So we told everybody an hour before the market opens, why am I thinking we could get a decent bounce? And what happens? What happens at Tesla on this day? Keep in mind, this is on the 11th. I did this at 6:30 in the morning, right about there. Tesla bounces and bounces. This is not after the fact. This is not, oh, I told you so, or hey, or anything like this. Like, this is me calling what's happening in the market before it happens. And why am I able to do that? The long answer, which is like a sentence, is 25 years in the market, institutional trading, 60,000 hours behind the charts, over 10,000 trades, observing over 8 billion candles. If I was to take all that information, put it in your brain, assuming you could adopt the habits and integrate it, you'd be making money too. It's not something special about me. I've just put in the work. It's not like I'm some super high IQ person. Granted, I consider myself to be a pretty smart person, but I'm not like some ultra IQ person. It's not about IQ. If I put those things in your brain, you could do too. But what's the short answer? PFP. If you can learn to read the positioning in the market, if you can learn to read the flow, if you can learn to read the price action, those are 3 separate skills, then you can generally see what's going to happen in the market and be pretty accurate 2 out of every 3 times. So this is the basis of the PFP methodology. We've gone about 30 minutes here, Rodrigo, so I'm guessing we have a bunch of questions.
Yeah, so thanks for that there, guys. So again, for sending these questions. We're going to go over some of these real quick. After that, there's several things we're going to cover here with Chris. But before we do that, we'll just go over this real quick. So, guys, the lifetime package is not on the checkout. So just make sure that you call in the number there. It's not on the checkout. The 7-day money back guarantee is for all the programs. So you have a full 7-day money back, no strings attached. Next question I'm seeing here is, how about the alerts? How would I get them? I have a full-time job. So you don't have to quit your job for this. The alerts are sent to your phone, so you don't have to do anything different. The alerts are sent, entries and exits. Also, you do have a dedicated chat room for Chris Capri for any questions you want to ask him, which I suggest you take advantage of that. We'll show you why with Aioli in a bit. But yes, you do have access to Chris. You get the trade sent to your phone. These trades, you can do them with $60, $70, $80. You don't need a massive account for these trades. If you don't know anything about options, well, we do have the option school for that. So at the end, we're going to go over all these, a little bit more details, right? But only for today, okay? And I just want to be clear, okay? Please don't call me tomorrow for this. But only for today, the people that sign up, Chris, you might want to cover your ears, okay? The people that sign up today for the 1 year of Trading Waves, we will make it 2 years, and we're going to throw in the option school and the PNP masterclass. You have till midnight to get that deal, okay? Trading Waves, option school, and PNP for 2 years. You have to sign up before midnight. Chris, I know what you're going to say. but we have to do it for the people. And by the way, there's no tariffs on this. So if you're in Canada,
No tariffs.
no, don't worry, tariff-free service here. Okay. So this is a deal. So regardless of any tariff, guys, this should accommodate everybody. So take the deal. Trust me. Just listen to me. Okay. If you get the lifetime, you're also going to get hooked up with that. You'll get the pro trading waves option school and the PNP. Chris is going to kill me, but look, guys, I'm telling you, take advantage of the deal because we've never done this and we're not going to do this again. Okay. So if you have questions, just join the trading waves. We'll do the adjustments tomorrow. And if you have questions for the lifetime, you can call me. Okay. I'll put all my details in the Zoom chat. So, Chris, anything that you want to add there, obviously, to the program?
I that is beyond a good deal. It's not even beyond a good deal. It's like a no-brainer in the sense of like there's one thing that's more expensive than education, and that's losing money in the markets. And I started off like every single one of you as a retail trader. I didn't start off and get like my first job, like it wasn't like my first trading experience was on a professional trading floor. I didn't have that luxury, right? I started off as a retail trader just like everybody else, just like everybody else. And I definitely had a lot of successes in my first year, but part of that was a little bit of right time, right place. So I started trading in 2000. And for those of you that weren't trading back then, we had this kind of dot-com boom that was in play that was just kind of insane. Like everything was just going up. It wasn't that hard to make money trading. As the saying goes, everybody's a genius in a bull market. And we had a bull market. But sadly, within about a year of starting trading, that market just completely flipped on its head into a bust. And so, even though it was challenging, even though I made a lot of stupid mistakes, if you're not trained well, you're going to make a lot of mistakes. Just flat out. If you are not trained well, if you don't have someone who's going to look at your trading, and like you share your trade ideas and they're going to give you feedback based on their 25 years of experience. If you don't have that, you're going to make a lot of mistakes in the market. And those mistakes are expensive. And I'm not just, I'm sure you've all had that reality, but I'm also telling you from personal experience. I have made some really expensive mistakes in my time. Like some of them that are like the equivalent of like a Porsche, right? And so that is not fun. It's not fun to have those experiences. Were those losses necessary? Not if I had had the training. Like I haven't made those mistakes since I got trained. Every now and then I, make a stupid trade. Like the last time I made a stupid trade, and I was talking to my members about this was 2023. Like I made a really stupid trade and it wasn't a Porsche, but it was expensive. But those mistakes happen few and far between when you're trained. When you're not trained, when you haven't wired those things in your brain, you are going to do what you're most dominantly wired to do. And it's a very simple kind of litmus test. If you are wired to make money trading now, if you have all the wiring in your brain to make money trading now, you'll be doing it flat out. Whatever you're most dominantly wired to do, that's what you're going to do on a day by day basis. If you are not wired to make money trading right now, you won't. It doesn't matter how many videos you watch. It doesn't matter how many books you read. Like you could read 10 books or 1,000. If you haven't dominantly wired your brain to make money trading, you will not make money trading, flat out. And so the best way to do that is to get trained with a methodology that makes money and to watch somebody who does it and to get feedback from them. Because that feedback is a critical component. You can't just make your trades and then you be responsible for your own learning process. There's no professional athlete that's not worked with a coach. Every professional athlete works with a coach, and they do it for decades. There's no martial artist who became a full-on black belt, Bruce Lee, type dude without a teacher, without a sensei. There's nobody who's become this amazing concert pianist without training with somebody. It's the same thing in trading. And so you need to get feedback from somebody who's watching you, who knows what are the mistakes you need to avoid, who's seeing your patterns, who knows what you're doing right and what you're doing wrong, and has a method that works. If you don't have that, good luck. And so there's one thing that is more expensive than training, like education, and that's losing money. And so if what you're doing is working, you probably wouldn't be here. Like, I don't go to webinars like this. I don't. I don't go to webinars like this because I don't need to. Like Michael Jordan doesn't go to, Michael Jordan when he was winning championships with the Bulls wasn't going to some, basketball camp from a high school basketball player to learn how to play basketball. And it's the
Do you
same
go
thing
to
for us.
TikTok? Do you go to TikTok or
Good God, no.
where's the
Nobody at my caliber goes to TikTok or Twitter or YouTube or some sort of Discord room or Reddit to learn how to trade. It's just not how it works. You don't become a neuroscientist by going to TikTok or going to YouTube. You can learn
Mhm.
some things, but it's not going to be cohesive. And so it's the same. You don't become a badass martial artist by going to TikTok. You don't become a concert pianist by going to TikTok or Twitter or YouTube. Nobody at my caliber does that. Like we have very specific training regimen, just like a professional athlete does. We do
Right.
those things, and that's how we make money trading.
Chris, and no, I agree 100% here. So Catherine here saying, I've taken 2 courses on options trading and I just have a block in my brain for understanding it. I went through the chapter twice, still don't get it. It could be the instructor. And there's a lot to that point. There's a lot of misinformation out there, Chris. There's people that pretend to be gurus and they're just basically doing a plain money grab. Whereas you have other people like what we do here, which, we're trying to do good work here. We're trying to actually help people.
We're not just trying to, we are doing good work. It's like our record speaks for itself. There's nothing anybody can do to say that we don't know what we're doing. Like we make trades in the market in front of our students live. So I train live 3 days a week for my Benzing Option School members. Trading Waves, I see them live on Mondays. And I'm live in the chat 9 a.m. to 2 p.m. Eastern Standard Time. So students can ask me questions at any point in time in that window, and I'm answering it on the fly. And so a lot of it is questions like Aoli here. So Aoli had a question about Microsoft. And first off, he's like, hey, nice call on Lily. Good job on that. Any thoughts on Microsoft bull call spread 415? Or bull call, I think it's a bull call spread or a bull call. He wants to buy a bullish call at 415 for March expiry, $11 debit. And this is what I said. Hey, thanks for the hit on Lily. As flows are barely bullish, not that enthusiastic. Positionally, there's deep support between 410 and 400. Price action is mixed. So if it were me, I'd wait for a more favorable, stronger flows and better price action. Check back at 410, 400 if it looks better there. And what happens on Microsoft on that day? Sells off. And then he comes back the next day and he's like, good thing I listened to you. Microsoft just dumped with the market. I'll look for a long-term entry on 400. Like, this is another thing that I cannot recommend enough. So I want you to think about this for a second. What are our stats? We're about 65, 66% accurate. So that means for every 100 trades we take, we're going to win 66 out of 100, right? But that also has other implications, downstream implications. That also means that for every kind of a feedback, a student comes in, hey, I'm thinking about a trade idea. That means we're probably going to be about 65, 66% accurate on that as well. And so if you think about that, let's start playing that out to its logical conclusion. If you were to present to me as a student 100 losing trading ideas, I just stopped you from making 66 of them. So think about that. Think about your last 100 losses. And then now think about what would your trading account or what would your bank account be if 66 of them were wiped off the board? They never happened. What would the account be right now? Would you be in the positive? If you're losing money, would you be now making money? My guess is most of you probably would be. It's pretty hard to delete 2/3 of your losses and not make money trading. Or if you're already making money trading, if you were to delete 2/3 of your losses, you're now making a lot more money. But it's not just that you're making more money. What does that do for your mind? What does it do for your confidence? When all of a sudden you are sitting there and you're about to make a bad trade, you don't know it because you're still learning. And then somebody who's got 25 years experience, 60,000 hours in the charts, comes in and says, bad trade because of this, this, and this. And then you say, okay, I'm not going to take the trade. And then you see, oh, wow, he was totally right. And thank God I didn't because I just saved myself. What does that do for your confidence? Knowing that there's somebody there that you can just ask and they'll give you feedback that could save you money 2 out of every 3 times or help you make money 2 out of every 3 times. that changes the calculus of your account and your finances. There's it's like just as straightforward, flat out as you could be. So it's not just also, and there's an important thing that goes along with this that has to be mentioned. Most losing traders are probably in a bandwidth of 40 to 50% accuracy. But the problem isn't necessarily the accuracy, it's that they're losing, big when they lose and they're winning small when they win. And so, what happens if those dials get shifted to you're losing a smaller amount when you lose and you're winning a lot more when you win and you're winning more often? Like those, every loss you have, it does something to your brain biologically. It changes your hormones, it changes your chemistry. I can tell you that if you take a decent sized loss, I can tell you with 95% accuracy, you're going to experience a big drop in testosterone. Man or woman, doesn't matter. Women produce testosterone too, just less than men. And you need testosterone to trade, to take risks. If I was to just pull out all the testosterone out of your system right now, you would not be able to make a single trade. You would not be able to make a single trade because you wouldn't have the chemical support in your brain, in your body to take risks. And so when you take a loss, your testosterone goes down. When you take a win, your testosterone goes up. And so taking less losses helps to balance your neurobiology and your chemistry so that you feel more confident to take on risk. And it changes you psychologically, knowing that, okay, hey, I lost the last one, but I've been winning so much lately. I've been winning 2 out of every 3 trades. Not a big deal. It doesn't hurt your psychology because hey, I'm winning more than I'm losing. And so I want you to just start to think about what that would be like to wipe off 66% of your losses, to win on average 2 out of every 3 times, especially if you follow the recommendations of said teacher. But then what it does for your confidence to know that, hey, I'm winning a lot more than I ever have before.
Right.
It'll change the way you trade and changes the way you see the markets.
Chris, and just before we do get into a couple of these items, if you just want to maybe briefly touch what is the PNP Masterclass, because even stock traders can benefit from that.
Yes. So this is an important thing that everybody has to understand about options and stocks. Right now, we're kind of in the second golden age of options. The first golden age was about 20 years ago, but we're now in this second golden age of options where option flows are becoming some of the most dominant flows in the market. And so on an average day, about 51% of all transactions in SPY is going to be an option. So therefore, it's on average, it's the majority flow for the day. If options are the majority flow or the most dominant flows more often than not, then even if you're only going to trade stocks, you have to keep one eye on the options market and understand what's going on because that is going to have a huge impact on how the stocks behave. There are things that are happening in the options market that are going to affect stocks and stock prices. Option dealers and market makers are going to buy and sell shares. They're going to buy and sell calls. They're going to buy and sell puts without any concern for whether the stock is got good P&E or not, whether the earnings were good or not. They have to do automatic hedging activity, and those flows are going to start to push the stock around. When you can learn how to read those flows with what's going on with the option dealers and market makers and all these different levers, volatility, charm, Vanna time, delta, gamma, all these things. When you learn about all these levers and what the option dealers do in response to that, you can start to make predictions ahead of time saying, hey, we think, like March 11th, we think that even though the market's been selling off, there could be a bottom happening here. And most tickers have had a little bit of a bounce happen since that prediction. So you can start to do that ahead of time. So even if you're only trading stocks, you still need to understand options because right now they are often the majority or the most dominant flows in the market. And so you have to understand how they're pushing flows around. So with that being said, what is PFP? So again, PFP is our methodology and it's positioning, flows, and price action. And what it is we have an entire course that is dedicated to my methodology. So again, my methodology, PFP, stands for positioning, flow, and price action. And we have now built a course to teach you exactly how to read positioning, exactly how to read flows. Or not flows right now, we're working on that one. exactly how to read the price action. What are the exact patterns and models I look for to read positioning and price action in the market every single day? Every single day. You can learn the exact same things and steps I go through to determine what's going on with the positioning, to determine what's going on with the price action. And then once we have the tools, we're going to build a flow-based course as well. So I have an entire course that teaches you my system and my methodology. Hey, this is what I'm looking for. I'm looking for this, this, and this. If you spot this, it's bullish. If you spot this, it's bearish. And this is what I'm looking for in the positioning. If you see this, this is the real support in the market, because real support doesn't come from a chart. Real support comes from institutional positioning. So here's the real support in the market. Here's the real resistance. And one other important thing, super, super important, at what price, if we're below that, do we have to worry about markets selling off? Like stocks generally want to be bullish, right? Most people want to be bullish in stocks. They generally make more money being bullish than bearish. However, markets do go through bearish periods. Wouldn't it be nice to know every single day for your particular stocks at what price that if we get below this point, this price, this strike, this is going to actually make the stock really vulnerable to losses. Oh, we're above this price? Don't have to worry about protecting your position. Don't have to worry about taking profits. It is supported. It should keep going higher. That is something we teach in this course. It's a quantitative level that we've built from our proprietary models in options positioning that we can tell you exactly at what price and at what strike that you need to know. If we're above this, we're bullish. If we're below this price, we're bearish. And again, it's not something that's in a chart. It's in the institutional positioning. So that's what the PMP Masterclass is. So we have weekly meetings on Mondays where we do quizzes and test people on the price action models, on the positioning models. As you can see, we're building a tool in the background. This is in beta right now. And so we're building this tool that's showing open interest and notional gamma. You don't need to know what these things are, but it basically gives you an insight in where the institutional positioning is over time and how it changes over time. So I'm baiting it right now with the developers. Once that's done, then that's going to be live available for my Trading Waves and Benzing Option School members only. But it's free now, but when we launch it, it's going to increase the price of these courses massively because this tool is like this tool, honestly, I could charge $1,500 a year just for the tool once people learn how to use it. That's
Right.
how powerful this tool is. It's
Really
one of the most essential pillars of my trading.
very quick, Chris, I just want to make sure I clarify that for the people that just joined here. We just had a bunch. There is this tool that Chris Capri is showing you. It hasn't been launched yet. Once it's launched, the prices of the option school and trading ways will both go up. If you sign up before that launch, well, you sneaked in before the launch, but we weren't even supposed to tell them that, but that's fine.
Yeah, and we're gonna beta it. You know, once we've kind of ironed out all of the bugs, then we're gonna beta it with the students. And then right now it's 10 tickers, so we have 10 tickers that we have this data on. But then once that's done with the students in beta, we're going to go live with 100, maybe 1,000 tickers. That we're going to have positional data, open interest, and notional gamma on hundreds of tickers, so that you can if you trade some of the most major tickers, Tesla, Nvidia, all these things, that you can see where the institutional positioning is through these tools. Super, super important. So I can't stress this enough. Again, it's one of the 3 most important variables of how I make my trading decision, and how my methodology and system works. This tool alone, if I had built this tool, I'd be charging $1,500 a year just for the tool alone, just for this tool alone. So super, super important. All right.
Yeah.
So that's the PMP. Sorry, go ahead.
Yeah, let's get to some of these items that we want to cover. My phone's been blowing up, guys. Look, we'll make the adjustment here later today. Just sign up for the regular 1 year. We'll convert it to 2 years at everything. Just make sure you do it before midnight. If you want the lifetime, you do have to call in, but I'll be here afterwards. So, Chris, well, first of all, great explanation, by the way. I know a lot of people really need this right now. A lot of retail traders out there, they're feeling it. And, what do? They might go to YouTube or TikTok, and it's like, look, if you have a good program, you're not only do you learn from the analysts, but also you have a real community, real people that are doing this with you. We're all together. So it makes it a lot easier for sure. So, all right, first things first, Chris, give us your macro view and volatility view, and how does that incorporate into options? Is it the right time to be trading options?
100%.
Yeah.
If anything, it's you want to be trading options more now than you want to be doing shares. So let's go back to our morning market commentary. And you can see that for a long time, and I'll just go back a little bit. And you can just see, March 6th, don't add any longer dated bullish exposure. In other words, now is not the time to be buying shares. And this wasn't the first time we've been saying this. We've been saying this for quite a while. Quite a while. Again, we are not ready to add long dated bullish exposure. How do we know that? Well, there's a couple things, but again, one of it's that proprietary indicator, which we call the BBP. It's called the bull bear pivot level. I've recently written about it on Benzinga. So if you follow my author profile, you'll see those articles. But this is a proprietary model we have to detect exactly where in the market that if we get below this, will the dealers, the option dealer market makers, start to exacerbate the downside. So there's a certain price in the market for every ticker that if we get below that price, the option dealers and market makers, if the market goes down, they'll sell. That means they'll exacerbate the downside. It also means that if the market goes up, they'll buy. So they'll exacerbate both sides. That increases volatility. So we have that level that's available for these tickers that we watch every single day. And our students get access to this. We are in a situation where 90% of all the tickers out there that we watch, and we watch a lot of tickers, are below that level. And so what does that mean for volatility? It means volatility is going to be higher. Volatility cuts both ways. It means that if the market goes down, it can sell off more than you expect. But it also means that if the market goes up, it can shoot up in a much stronger way than it normally would. The problem is that those big those impulsive moves to the upside look believable unless you're untrained. If you're untrained, you'll think, oh, wow, the bottom's in, the market's bottom, we're at time to buy. We're not above those levels. So that's why we were saying, treat upside rallies with skepticism. We expect more downside, and then the market goes lower. So in terms of the macro right now, with 90% of the tickers below that level, you should expect more volatility. You should expect that upside moves are not to be trusted until we get above those levels. And we'll go over a few of them for like Tesla, Nvidia, that kind of thing. And the main thing that's hanging over the markets on a macro perspective is tariffs. 100% is tariffs. So with these tariffs in the market right now, you should expect downside pressure in equities. You should expect inflation to tick up. If inflation ticks up, then the Fed has no more reason to lower interest rates. They would actually increase interest rates. That will cause more problems in the economy. That will increase borrowing costs. We've said it for days and days and days and days and days, and you can even see it right here. Yeah. So again, this is what we tell them. Until the tariffs have clarity of a deal in place, we think this is a major issue for equities in terms of stability. So until these tariffs, and we just been mentioning again, we feel the main macro theme hanging overhead is tariffs. Until we get resolution here, equities and the uncertain tariffs will be like the sword of Damocles over the markets. So until these tariffs get resolved, particularly China to some degree, yes, but the more important ones are Canada and Mexico. So until these tariffs get resolved, we should expect equities to be weak as a whole. We should expect inflationary pressures. We should expect volatility to be strong. Once we get resolution on these tariffs, like if Trump comes out and he's like, look, okay, we're done with tariffs. We signed a deal with Canada. We signed a deal with Mexico. We don't have to worry about this going forward. We're good. You're going to probably see equities rally and rally quite a lot. And it's not just going to be traders are going to be buying equities. It's also going to be, they'll be reducing their bearish positions. And on top of it, volatility, has been quite elevated. When volatility comes down, that creates a tailwind for equities. It's another one of these levers. And so when vol comes down, markets tend to rise. So if the tariffs are solved, we're going to have less reason to hold bearish positions. We're going to have people buying equities. We're also going to have vol come down, which is another tailwind to equities. We could probably see a really strong rally. But until that happens, as long as those are still in the markets, and as long as we're below those key levels, that bull bear pivot level, we do not think markets are going to have any sustained rallies. We just don't see it. If there's no new catalyst, there's no resolution to a war, there's no reduction in interest rates, there's no if there's no other outside positive catalysts, we expect pressure to remain in the markets, volatility remain high, and traders are just going to be less willing to take risk. So that's kind of our overall macro theme in the market. Does that make sense? Yes, no? Let me know in the chat. Okay.
Yeah, no, that's some great insight there. Chris, so what are you looking for anything in particular now in these employment numbers? Anything that's catching your eye? Is it a big deal or no?
Yeah, don't get me wrong, employment numbers are important. They're kind of like another engine that is impacting the economy. The Atlanta Fed said, hey, NFP could be pretty bad. It didn't happen, so we were okay. We kind of dodged a bullet there. But there's a lot of downside pressures in the market. We have the tariffs, which is going to increase prices for everyday Americans. And so that's important. That means inflationary pressures are going to be there. If inflation ticks up, the Fed has less reason to lower interest rates. They might even raise interest rates. Then we have another engine there with the raising of interest rates that causes more problems in the markets. And it kind of becomes this vicious feedback loop. So because of that, we feel like right now markets are not going to be that stable. Are there some windows of opportunity where markets could start to rebound even just a little bit? And if so, can we trade them? The answer is yes. So we think that probably late next week, one of those windows is going to open up. We think probably in about, and let me just look at my calendar. So not just next week, probably Thursday, Friday next week, we might start to see that. Wednesday, Thursday, Friday, might see a little bit of upside tailwinds manifest. We also think the end of the month, we could start to see another window open up where markets have a chance to rally. If by the end of March or the beginning of April, if we have no resolution on tariffs, then we would expect another series of down legs in the market. And so, that would be SPY, that would be Tesla, that would be Nvidia. A lot of the main tech players would be vulnerable. We have a lot of trades we're eyeing right now. Like we just executed a trade for our members today. And we have about 4 trades that we kind of got lined up and we're just waiting for like the right price. That could happen tomorrow. So there's a good chance it could happen tomorrow. And if not tomorrow, then Friday. So we have about 4 trades lined up that we're pretty close, but we're a few dollars away. But those could happen as quickly as tomorrow. They could happen even by tomorrow, European close. So yeah, we're watching Nvidia. Right now we're watching we're watching like a hawk, SPY, Tesla, Nvidia. But we're watching some alternatives. So we made a lot of money on Lilly as of late. And so other than the last 4 days, 3 days, 1, 2, 3, you can see Lilly's been doing pretty good, over 1, 2, 3, 4, 5, 6 weeks. It's been up 5 out of 6 weeks. And only the last 2 weeks has it come down. Another one, Amgen. Look at the weekly chart on Amgen. There have been a few isolated pockets. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Of the last 11 weeks, it's up 9 weeks. So there are a few isolated tickers where when people rotated out of tech, they rotated into. And so we made money on Lilly. We have an Amgen trade right now. We have a few trades going right now. But the number of pockets where we can take legit bullish trades is getting smaller and smaller. And if Amgen's gone from 250 to 320 in that 11 weeks, if your whole portfolio, if 90% of your tickers are going down, what are you going to start to do? You're going to start to take profits on those things that have actually been making money. Amgen and Lilly being one of them. So now we're starting to see that the number of legit bullish tickers is getting smaller and smaller. And so what does that mean? That means that we have less opportunities to the bull side. However, if we get those bounces, those windows, maybe next week or week end of March, then we have several tickers that we want to get bullish on. But short term, We got about 4 trades lined up for tomorrow or Friday. We're pretty close. We just need them to move a couple bucks and we can take the trade.
Chris,
So
just a follow-up question there.
yeah,
So, um, I don't think it's I mean, even though the tariffs and all this stuff is kind of new, but I mean, Trump was talking about these tariffs for a long time, throughout his entire like campaign. So why does it hit as a surprise, or do you think there's something else that is beneath that's kind of caught? Could it be some sort of people just don't want to deal with it? Could it be people just politically just I don't like the guy, I don't want to trade, or because I've heard that sort of thing as well. I mean, what do you recommend as a trader, unbiased trader here?
yeah, it's a great question. There's three main things that we have to look at here. So Trump, from my experience, says a lot of things, but he doesn't. Oh, he like says so many things that it's hard to keep track. But a lot of those things he doesn't actually do, right? Or at least some of them he doesn't do. So I think when people were talking about when he was talking about the tariffs months ago, people didn't fully understand. So I think that's the first thing. I think they underestimated it. The second thing is the rollout of the tariffs have been kind of what I would say wishy-washy. There hasn't been an even hand in that process. So if we look back to how the tariffs started, he initially was like, okay, tariffs on China, Canada, and Mexico. And Canada and Mexico are like, okay, we'll make a deal. So then he like literally one day later pauses the tariffs and says, okay, we're going to pause them for 1 month. So he makes a deal one day. The next day he changes the deal. Then he, in that process, adds tariffs to China. Then in that process, 1 month later, he's like, okay, we're going to put tariffs back on Canada and Mexico again. They're not playing our game. And then the markets react so badly one day later, he's like, okay, we're going to suspend the auto tariffs and we're going to suspend these other tariffs. That kind of uncertainty is not good for traders and investors. Like people with serious capital watch that. And when somebody has an even hand, it's easier to work with because you feel like, okay, I can get a sense of where this is going to be 1 month, 3 months, 6 months out. But when somebody flip flops 5 times and is kind of all over the place, that unevenness makes it harder for traders to really get a sense of what's going on or what is going to happen long term. So I think that uncertainty is causing a lot of problems in the market. And Canada and Mexico are not just rolling over, like they're willing to fight. And
Mhm.
so the bottom line is that people, if they weren't educated about tariffs before, they are now becoming educated about them. And tariffs, a lot of people thought originally that if we put a tariff on China, China is going to pay the tariff. That's not how tariffs work. And so now they're realizing, oh shoot, my costs are going up. That's why the price of eggs have skyrocketed, right? That's why the price of, beef and energy and steel, all these things have gone up. And that's hitting the average person. If you're wealthy, it's not a big deal. Like my energy costs going up 25, 30%. It's not fun, but it's not that big a deal. But for the average person, it's a big deal. And that means something. So in terms of your question about the tariffs, we have to understand that um, tariffs with our biggest trading partner is going to cause a lot of problems. Our biggest trading partners are Canada and Mexico. Like we get 70% of our agriculture from Mexico. We get a ton of energy and major metals and stuff like that from Canada. And so the tariffs on them affect us in major ways. And so I think the volatility is warranted. It's large players with a lot of money saying, "Hey, we are going to deleverage. We're going to pull money out of equities. We're going to now buy a lot of puts. Those are protecting the downside. We are not going to, buy equities at this point. So you're removing a lot of the things that would support the market to go higher.
Mhm.
And when you do that, that creates more volatility.
Right,
Yeah.
and obviously we do take advantage of the volatility because it's not going anywhere. If it's not this, it's the other thing. So, quick question here: do you think the Ukraine Russia, if there's a peace deal, would that be massively bullish? Do you think, or would that be just another headline here?
I think it will have a short-term effect, and I think it could have some effects, some positive effects in terms of grain prices. Like Ukraine makes a lot of grains and things like that, so it's kind of important. But I don't think it's the number one thing dominating the market. So, do I think it could have some positive? Yeah, for sure. I think some volatility will come down. I think you'll probably see VIX come down a little bit. And I think it will definitely have a short term tailwind. But if nothing changes on the tariff front, I think that tailwind is very short lived because the effects of tariff are much more immediate now. So I think short term it has a as a positive effect, but I don't think it will overwhelm the negative consequences of having such aggressive tariffs on our two biggest trading partners. Yeah, it's a great question. It's a great
Great.
question.
So, if you want here, Chris, maybe we can take some tickers here
Yeah.
from the chat. Um,
Yeah. So everybody in the chat, let's take time to look at, some of your top tickers. So put your favorite tickers in the chat that you want me to analyze, and I will in real time analyze them using PFP, my positioning flow and price action models. So whatever tickers get the most votes, those are the ones I'll hit. So everybody go ahead and put your answers in the chat and let me see what you come up with. And it doesn't matter the tickers, we're totally agnostic. We'll analyze anything. As long as it has enough options, we will analyze it.
And one thing very interesting, I forgot to ask you there was the whole situation with Tesla. The whole sentiment. I mean, there could not be a more unpopular person, I guess. In some cases, dealerships setting on fire, cars vandalized. Does that sound like a bottom? Like everybody's just so negative on Tesla that might just be. I mean, how worse could it get for the guy?
Yeah, I never look at sentiment as an indicator of a bottom or a top. And here's the reason why. The bottom line is that, I mean, Tesla's one of those stocks that it seems to attract a lot of sentiment, and it's either that sentiment either tends to be really bullish or really bearish. You generally do not find people who are neutral on Elon Musk. You generally do not find people who are neutral on Tesla. Generally, when you talk to people, they're either like, hey, Tesla's the best thing ever. They're going to be worth like, trillions of dollars. They got all these things. Or you talk about people like, hey, this is overvalued. I think it's worth less. This is kind of a fraud, or this and this and that. Whatever. There's nobody really in between. The majority of people have like put their stakes in the ground, right? And so, but the bottom line is this: you have these two extremes in sentiment. But if that sentiment doesn't translate to actual flow, in other words, the buying and selling of shares, the buying and selling of calls, the buying and selling puts, it doesn't matter. What matters is how does the sentiment and how do the flows change in response to everything? And you could have bullish sentiment on Tesla. How many times has Tesla had these good, earnings reports and the stock tanks after earnings? How many times does it have bad earnings and the stock skyrockets after earnings? It doesn't really matter what those numbers are. What matters is how does the flow and positioning respond to that? If you could have negative sentiment on Tesla, if everybody's buying on that day, they're buying calls, they're selling puts, they're buying shares, stock's going up, regardless of sentiment. You could have everybody thinking Tesla's going to the moon, but if traders are buying puts hand over fist and they're selling shares, Tesla stock's going down, regardless of sentiment. So sentiment alone is never an indicator of a bottom or a top. Do I think Tesla has the chance for a short-term bottom? Yeah, and we talked about it. We wrote in our market commentary on the 11th. We wrote, and it was very clear as day for everybody. We said right here, why am I thinking we could get a decent bounce to the upside? It's as clear as day. We were predicting it ahead of time. We listed our reasons. These three reasons above can create a solid rally in light of the tariffs. What happens with Tesla? Rallies. So we wrote that this morning in the blue here. Rallies on the day, rallies on the day. So I don't think sentiment is a good indicator for tops or bottoms, oversold or overbought. I feel like Tesla, if it can get over 270 for me, that's a key number for me, because that's that line, that's that price where if we get above that, then the positioning shifts to, instead of puts being in control, calls being in control. And when calls are in control, prices tend to be much more stable, volatility declines, dips get bought, and it tends to go higher. So if it can get above 270, then I'm happy to start getting long and take bullish positions on Tesla. While it's below that, I'm treating these rallies with a little bit of skepticism. And so short term, yeah, being bullish for 1 day, 2 days, cool. Maybe another day or two, but I don't think it's out of the woods yet. And so that's why it's important to be able to check in every day and say, hey, what's that level? We offer that for our students. Here it is in our dashboard. Here's our bull bear pivot level. Tesla, 270. Right there. You can check in with this and see what that level is. And so we offer that and we tell you exactly where does the position change for these tickers, and we're doing more. So yeah, until we get above those levels, I don't think everything's, we're not out of the woods yet. A couple things about Tesla. And this is kind of two more things, and then we will take a look at the top tickers here. This is a very important perspective for people to understand. So let's look at the year 2024. This is the beginning of 2024. Okay? Prior to the Trump election, what was the performance of Tesla? Minus 12%. Keep in mind, they announced robotaxis, Optimus, the whole thing. What did that generate before the election? A minus 12% return. What happens the week Trump gets elected? Boom. Stock skyrockets. Trump gets elected, and again, changes in flow. Didn't matter what sentiment was. Changes in flow launched at 122%. Because traders, investors were saying, look, nothing has changed in the company, but we think that him being aligned with Trump is going to be very favorable for Tesla. And the flow changed enough to push 122%. So it wasn't the Optimus. It wasn't the full self-driving. It wasn't the robotaxis. It was the one thing, his relationship with Trump, that allowed to change the fates of Tesla. And guess what? It's unwound pretty much all those gains. So we're right back where we started.
La foto que le van a tomar.
So that's an important perspective on Tesla. I think if the tariffs remain, I think if he continues on the path that he's been on with Doge and with some of these other things that he's been doing, you got to understand that Tesla has a lot more competition today than it did 5 years ago. It is no longer the largest EV seller in the world. That's now BYD out of China. And it's gotten so bad. Sales in Europe have fallen so bad that Volkswagen is now the number one EV seller in Europe. It's fallen like 50% year on year. So it's got challenges. But if some things can change, then Tesla can find a bid again. So, Tesla is one of those stocks that if you're going to trade it, you need to be watching it every day because it has a very volatile cycle, very volatile news cycle. It can be bullish one day, bearish the next, and the winds can change very fast. So you just got to be paying attention. All right, let's take a look at what tickers y'all picked. So AMD, NVIDIA, of course, a lot of semiconductors, coin again, okay? So we got 2 for coin, Qs, Palantir, TSM again, NVIDIA again, Costco, a man after my own heart. All right, so let's do Qs. Let's do NVIDIA. Qs, NVIDIA, TSM. They're going to be similar, but we'll do it. Palantir, and then we'll do coin. So let's do those 5. All right, so let's start off with NVIDIA. And everybody go ahead and pick a time frame you want me to analyze NVIDIA. 1 day, 1 week, 1 month. So pick your time frame in terms of NVIDIA. What do you think is a time frame I should analyze? And then I can kind of, because once I know the time frame, then I can kind of, take a look out and say, hey, okay, this is what I see. So put your answer in the chat. Week, month, 3 months, month. Okay. So let's look about 1 week out for NVIDIA. We'll do 1 week and 1 month, all right? All right, so NVIDIA, take a look at, so the price action NVIDIA, it's rallied the last couple of days, which we predicted. The price action is kind of setting itself up for a little bit more upside. Do you see these little triangles there? Those are alerts for me. And so what you'll notice, 120. It's not because it's a horizontal support and resistance on the chart. If we go back to the dashboard, so what do you see for NVIDIA? 120 is that bull bear pivot. So if NVIDIA can recapture 120, then it's now in a place where the positioning is such that the calls are in control. They're more dominant than puts. And when that happens, things are much more stable. There's less volatility. Dips tend to get bought. So for me, Nvidia really needs to close above 120 on a daily closing basis. If they can do that, I think it can make it the run to 123, 125 pretty quick. But if it struggles, if it gets up to 120 and struggles, then I think traders are gonna be like, hey, we're not out of the woods yet, and you could see another quick downturn on Nvidia. So 120 is the key level for me. It's rallied well over the last few days. Let me look at flow and then positioning on the day. What was flow on the day? Solid, solid. Yeah. So traders buying a fair amount of calls, not much action on the put side. So they weren't closing their long puts and they weren't selling their selling puts. So most of the action on the day was calls. To be honest, most of the gains in Nvidia were actually pre-market. Yeah, most of the gains are pre-market because you look at where we opened and then we actually closed slightly negative or just above the cash up. We opened here. Yeah, so the most of the gains are in the first 20 minutes. And after that, just trade sideways. Yeah, so I'm leaning towards short term tomorrow. If there's no bad news or anything like that, I'm leaning towards a little bit more upside, but then it should push into, say, 120, and it might stall a little bit there. Let me see how Asia's doing, by the way. Yeah, Asia's much better on the day. Yeah. So Asia, half green, half red, a little bit more stable. Yeah, if nothing major comes out, I'm leaning towards a little bit more upside tomorrow, but it might struggle at 120. So keep an eye on that. Let me take a look at positioning real quick. Yeah, it has to get over that 120 hump. We can get over 120. Calls are in control. Can make a quick run to 125, maybe 130. Yeah, but an easy move to 125. Yeah, it should be pretty easy. 2-3 sessions max if it can get that daily close above 120. So I wouldn't be surprised to see in kind of 1 week prediction. If it can close above 120, I wouldn't be surprised to see it about at 125 by next Friday. Probably next Friday. All right. So that's Nvidia. Let's do. We got Nvidia, TSM. Just going through the tickers and AMD. Okay, so we'll do AMD real quick. These are probably gonna be somewhat similar because they all kind of move in sync. AMD might be a little bit more bottle. Let's see how the flows on AMD were on the day. They were okay. They were okay, actually. So AMD had a little bit different. So NVIDIA was most of the bullish option flows were just long calls. There was no action on the put side. AMD has a little bit of a twin engine thing going on. Traders were buying calls, but they were also selling puts. Most likely the bearish puts that they had, they were closing those. So when you close bearish positions, you gotta remember bearish positions put pressure on a ticker. You remove those bearish positions, it's relieving some of that pressure. So it had a second engine on the day, which is why I think it gained more on the day. So let's take a look at positioning. 100 is pretty sticky. Let's see. If it can get above 105, actually it has a little bit more. Yeah, 110. It needs to get above one. It really needs to get above 110. But if it get above 105, it's in a much better place. So the two biggest strikes on the board are 100 and 110. If it can close above 100, maybe it can make a decent run to 105, but then it's going to have to work a little bit to get to 110. Once it gets above 110, calls are in control. So, yeah, we'll keep an eye on this one. And then TSM. And then after that, we'll look at NVIDIA and coin. The TSM actually looks a little bit better to some degree. Yeah, okay. Yeah, so TSM is actually flows are very similar to NVIDIA. Lots of traders buying calls, not much action on the puts. That means traders are still holding some of their puts in the market. Where does TSM need to get above? 180. Yeah, if TSM can get above 180, so it has not much more to go. Yeah, $3. If TSM can have a daily close above 180, calls start to take over control. And if it does that, I think you got a pretty good chance of getting a 190. So if it gets that close above 180 and we start to see some of those levers kick in place that, tailwinds for markets to the upside, then I would think by next Friday, it could probably make it to 190. Yeah. And that's a little bit up, but yeah. That's what I'm kind of leaning towards. If it can get that daily close above 180. All right, NVIDIA, another big one. And then after this, we'll look at coin. So wait, we covered NVIDIA. So we covered NVIDIA, TSM, AMD, the other tickers. Coin, oh, Qs and coin. Okay, let's do Qs. Qs is not as bullish as the semiconductors. And that's because it carries a lot more tickers with it. And there's some tech tickers that just because it has a lot more constituents inside of it, some of those tech tickers are not performing as well. So I would say Qs is a little bit, I'm less enthusiastic. Like if you were to say, hey, pick a few bullish tech, like if you had to take a few bullish tech trades, Qs would not be one of them. Yeah. Don't get me wrong, Qs had decent flows on the day. Traders are buying some calls, but they were still buying some puts. So traders are not as willing to take the upside on the indices like SPY and Qs, but they are a little bit more with, say, NVIDIA, TSM, AMD. I think single tickers for the tech upside is the better play versus the index level. Let's take a look at positioning. Where do you need to get above? Yeah. At least 480. At least 480. Yeah. I think it's got a little bit more, maybe even 490 before we can really feel like we're out of the woods. So if somebody said, hey, you have to, like, they put a gun to my head and they're like, hey, you have to pick a couple tickers that you want to be bullish on for a couple days, maybe by next Friday, you think they're going to be higher by next Friday, I would lean towards NVIDIA, TSM, AMD. Qs, I'm much more skeptical about. And I'm even more skeptical about SPY. All right, let's take a look at coin 1 week out. Yeah, kind of a similar picture. Not as ebullient, not as enthusiastic. What was the flow on coin on the day? Yeah, bearish on both sides. Not much. Like the bearish flows on the day, it wasn't heavy on the accelerator. Traders are mostly dumping calls. Weren't really doing much of the puts. So they're just reducing bullish bets on coin, which mostly is short-term reducing bullish bets on Bitcoin. Coin is very tied to Bitcoin, so yeah, I think part of the reasons why Bitcoin is sold off is because, again, if you have a portfolio of tickers and 2/3 of your portfolio is going down, you eventually, to offset some of those losses, will take profit in the tickers that are doing well. Those are Lilly, Amgen, McDonald's, KO, that kind of stuff. And so they take profit in them. Bitcoin was one of them. Take profit in that to offset some of your losses. Bitcoin was just one of the victims in this. So how is coin positionally? Flow was pretty just meh. It wasn't heavy to the bears or heavy to the bulls. But where does coin need to get? Probably 200. Yeah, if coin can get a daily close above 200, calls start to take over control at that point. And then I would expect a pretty quick move to 210, maybe even 220. So that's kind of what I'm seeing on coin. So we covered Qs, coin, NVIDIA, AMD, TSM. All right. That covers, yeah. That covers the gist of 5 tickers. All right, so we've covered a lot, Rodrigo. We've explained the PFP system. We've shown how we make money trading with the PFP. We've analyzed some live tickers. We've gone over the macro. I wish you had told me ahead of time what the deal was, because I probably would have thrown tomatoes at Benzinga and y'all for offering such a deal. I just, like, our record stands for itself. So the fact that we're selling it for so cheap is, it basically, I mean, you're offering 1 year for free. It basically means I'm working for 1 year for free, which is kind of hard to digest, but yeah, it's a good deal. Like, I can't believe, if people don't take it, then I don't know. There's something wrong with them. There's something wrong, because it's a no-brainer for that price. Like, the signals alone pay for the service, right? Like, the signals alone, like, we calculated our estimated return on investment. It was like 67, 68%. just on these signals. Like if you're risking like a little 5% per trade, you easily walk with like a 68% return on the year. It's a no-brainer. The signals pay for the service. So no brainer at that point. So yeah. So I've gone over options, methodology, tickers, macro. Any last questions before I pass it on to you?
Yeah, so we all know trading waves, that's the trade alert focus program. PNP, where you teach your trading model. Um, Maybe if you just want to give a little bit of highlight really as the importance of the option school, and after that, I'll stick around, I'll go over all the details, I'll explain the deal and everything for people.
Yeah. So the Benzing Option School is the group that I meet with the most. I meet with them every Monday, Wednesday, and Friday, about 9:45 Eastern Standard Time. About an hour, each morning. I also write a market commentary 5 days. If the market's open 5 days a week, they get a morning market commentary before the market opens 5 days a week. So, and that's basically me explaining, hey, here's what I see in the options and the flows and the position and the price section. Hey, I think it's gonna be bullish. I think it's gonna be bearish. Watch out for this. You should do this. Avoid this. That's the morning market commentary. Option flow report is the first trading day of the week, where I cover the PFP, positioning flows and price section for the last week, and then I make predictions for the week ahead. And that report is pretty darn accurate. We got the dashboard, which is regularly updated. We have the live chat, 9 a.m. and 2 p.m., where you can come in and ask me questions about your trades. The live classes in the Benzing Option School, 3 days a week. During those classes, you'll be like, hey, Chris, I want to take this trade. What do you think? And I'll analyze in real time using my methodology. But then we also have this great option FAQ, which kind of explains the most important aspects of options. What is market gamma, option dealer, market maker, hedging? What are all these key levels? And then we have the lessons themselves. So we have 18 pre-recorded lessons that go over anything from the Greeks to volatility to option dealer, market maker, hedging activities, different strategies, day trading, swing trading, how to hedge and neutralize risk, all these things. So we have 18 lessons in there. We also have a bunch of other lessons in here. How to analyze flows, indicators and time frames I use, calculating implied moves, options, levels, and positioning, all that stuff. So we have a ton of information. The Benzing Option School, think about it like this. If you know nothing about options, if you even have some experience in options, even if you think you're a pretty freaking good option trader, there is something in this course for you. Like it is the 101, the 201, the 301, the 401, and the 501, maybe even the 601. Like we go into some pretty advanced stuff in here. And when you can be able to learn to read all that, it changes the way you see the options market and the stock market. So that's a Benzing Option School. Good chat room and everything like that. You can ask your trades and questions and all that stuff. And I'll analyze those trades in real time, like ACAP, asking about a McDonald's trade and all kinds of stuff. So yeah, so that's what the Benzing Option School is. And when these tools go live, Benzing Option Schools and Tradeways members will get access to them for free. After we launch them live, though, the price goes up. So make sure you get in before that because it's going to probably, I mean, it could double. It could double the price. So join while you can. So that's pretty much it. I'm going to call it a sesh, but stay on for Rodrigo. He's going to explain some things and cover some things that I did not cover. So yeah. So it was a pleasure being with you all. I look forward to working with you. I look forward to seeing the new members. I'll be live on Friday and for a live class. And on Thursday, I'll be in the chat, 9 a.m. 2 p.m. And so watch out for the newer members. You'll see the morning market commentary about 30 minutes before the market opens. So good seeing y'all. Thanks for hosting it. And I look forward to working with you.
Thanks a lot, guy. Chris Capri, thank you very much for being here, guys. So really quick, I'm going to go over all the details. Very simple here, straightforward. Recap for what the deal is, right? So the Trading Waves is one program. The Option School is a separate program. PNP is a separate program. Instead of paying $17.82 for the year for each one of those, just until midnight, if you get the 1 year for $17.82 for Trading Waves, we will give you 2 years, not just of Trading Waves, but of the Option School and the PNP Masterclass. That is only until midnight. So now let's say you do want to get the let's say you want to get the lifetime package.